Hello, guys. Good afternoon, good morning, good evening. Welcome. And I'm so glad to have you here this special time of the day. This is Saturday, the 5th of March 2022, here in United Kingdom. And I'm Michael or Damola or whatever you call me. I talk finance, business, and investment. I am the multi billionaire fund manager, profitable investor and trader. And today we want to be discussing an interesting topic. We actually started last week. I started a course on how to trade the foreign exchange market. I've been trading the foreign exchange market for over 2 years plus, let's say 2, 3 years. And I am a profitable trader and I'm a profitable fund manager. I manage millions and I also want to manage, I'm going to be managing billions. Trust me. So, what I want to do is from my knowledge, from my experience, and what I've gained so far, and what I've learned from my mentors is what I want to share with you. I mean, some stuff that work, rather. These are stuffs that work. Sorry you can't see my face. My room is very organized. Okay, so today we want to talk about trend law for both bull and bear market. If you haven't watched the previous video, I suggest you should go and watch it before you come to watch this. And I want you to like, share, subscribe. Remember, I told you guys something. We are going to have millions of subscribers, millions of views, verified accounts. So be part of the journey now. Like, share, subscribe, comment, and also give me a suggestion on where you want me to improve on this channel. Without further ado, let's just go to what we have for today. Trend law. So we want to be talking about trend law for both bullish and trend law for a bearish market, and also connecting the trend line. I want to be giving you bit by bit, so I don't just give you a lot of stuff that you can't relate. We're going to do a whiteboard session, then also going to do a practical session. And so let's just dive deep into the whiteboard session. Thank you. Okay, so trend law for a bullish market. Now we have trend law, like these are stuff you must see for you to know if this market is bullish for this period of time or if this market is actually bearish. So it's very important that you find these things first before you actually make a decision if to buy or to sell, combining other tools or other important features that you must see in the market before you make that buy or sell decision. Okay, I want to just do something shortly. Okay, yep. So they're very important stuff that you must see before you make a buy or a sell trade decision. Now I want to say, or I want to define what the trend law is for a bullish market and what the trend law is for a bearish market. So for a bullish market, the trend law is as simple as higher highs and what am I spelling? Yes, higher lows. H and HL. That's a simple. So this is how the market goes, in not just in a single upward direction or a straight downward direction. It happens, but not all the time. Most of the time, 95% of the time, the market moves in a zigzag form. So this is what I mean by zigzag form. Goes up, come down, goes up, come down, goes up, come down. That's how the market moves. So this is a low, this is a high, this is a low, this is a high, this is a low, and this is a high, right? This is called impulsive move. It's an impulsive move, and this is called a corrective move. Correct. This is called an impulsive move, and this wave is called a corrective move. So the market moves upwards, then it corrects back downward, it moves upwards, it corrects back downward, it moves upward, it corrects back downward. That's how the market moves. So we say this is a low, this is a high, this is a low, this is a high, this is a low, this is a high. So in other words, we call this the higher high, and we call this the higher low. We call this the higher high, and we call this the higher low. We call this the higher high. Now it's falling down to form another higher low. That's simple. So when we start connecting these dots together, I usually tell my student that this is 1, 2, 3. Then you should start looking for reasons to buy at this position. You start looking for reasons to buy at this position. You start looking for reasons to buy at this position. So it's just like you going to the shop to buy stuff or going to the supermarket to buy stuff. If it's a place that permits you to price the product, you want to price it at a lower price, not at a higher price. You want to price it at, even when it's a luxury good, let's be honest, even when it's a luxury good, you want to price it at a lower price. Yes, it's a luxury good, it's very expensive, but you want to still price it down so that you can get a price that is lesser than what the seller is actually advertising for that product. So the same thing is, you don't buy at the higher highs. You don't buy the position where it's high. You don't buy the position where it's high. You don't buy the position where it's high. You buy at the lower price. You buy at the lower price. The reason being is because when you buy a car at the highest price, and let's say after 2 years, or let's say after 2 weeks, your friend bought that same car, and he say he bought his own car for about, let's say, £60,000, and you got yours for about £90,000. You want to, there's that tendency of you feeling bad. Oh, I should have just waited a little while so I can get this and save £20,000. So the same thing happens if you are very, very impatient to buy at this level because you feel this market is a bullish market. So you decided to buy here, decided to buy here, you decided to buy here, you decided to buy here. Unfortunately, you decided to buy here at this level, and the price now start tanking or start moving south. There's that tendency to start panicking and you want to close your trade. And most of the time, psychologically speaking, you end up closing your trade and you discover that the market is now heading off and you're not happy with it. So that's for the bullish market. Now for the bearish market, I want to claim this. So we've talked about the bullish market. Now I want to talk about the bearish market now. So the bearish market is just opposite of the bullish market. It's called lower highs and lower low. Lower highs and lower lows. That's what it's called. So this is the market. I said it's moving in zigzag direction. The market is heading downwards. I think I should be an artist. I have a good accuracy. Okay, forget about that. I'm just joking. So we say lower low, lower highs and lower low. Lower highs and lower low. The market is tanking downward. This is a high, right? But the market is moving downward. So we call this a low. It's actually, this is very, we call this high, right? Now, but this is also called an high. I mean, this position is called a high, but it is lower than this position here. This is also called a high, but it is lower than this position, so we call it lower high. This is called, if for instance the market is still going this way, for instance, this is called a low, but it's lower than this position, so it's called lower low. Lower high, lower low, lower high, lower low. Now it's forming a lower low. That's exactly what it means. So the same rules apply. The same rules apply, the same rules apply, the same rules apply. So you are interested in selling at these positions. This is the position you're actually interested in selling. You're not interested in selling at this position. At this position, you're not interested in selling. You are interested in selling at this position. You're not interested in selling at this position, because if you start selling at this position, the price is now going up. The price is now heading north. It's now buyers are in the market at the moment. So psychologically speaking, there's that tendency you place your stop loss. Don't worry if you don't know what stop loss is. I'm going to explain this time. There's that tendency you place your stop loss, or let me just quickly explain that. What I mean by stop loss is a setup in the market whereby you tell the broker, or you tell the system rather, or the broker that please, I want to buy, I'm interested in buying. But if the market decides to start selling, please take me out at this level. It's called a stop loss level. So once the market gets to this level, the brokers take you out automatically. This is electronic action or electronic order. The broker take you out automatically because this is where your stop loss is. So imagine you actually were buying at this level. You are quite safe because the market went up. But if you are actually buying at this level, for instance, the market is tanking down and you buy at this level. Now, the market is coming down. You might get a little bit hope that yes, the market is going back up, but unfortunately, the market held down. That's because you broke the rule. You started buying at an high, not at a low, right? If you bought at this level and the market decides to go down against you, you are just losing a little. But if you bought at this level or you bought at this level and the market decides to go down against you, you are losing more. Let's say this person that bought at this level, he lost 10 pounds. But if you are buying at this level, you are probably losing about 13 pounds, something like that. So you can see that you lost more because you broke the rule. So that's what stop loss is all about. So you are only interested in buying at the lower high level because these are the positions we are looking for reasons to sell. If you are looking for reasons, mind my language, you are looking for reasons. You are not just selling, you are looking for reasons to sell. That is very, very important. Okay, so we've talked about the bullish law, the trend law for a bullish market and the trend law for a bearish market. So mind you, 1, 2, 3. At this position, you're looking for reasons why you want to sell, right? Okay, so let's go to the third point of what we want to discuss today, which is connecting the line. But first of all, let's do a practical session in the chat and let's see what we are talking about here. Sorry, my pen is not, I think I need to put in my pop. Okay, let me use this. Let me just use this. Okay, so 2 seconds. Let's just look for a bullish market. So we can see that this is a bullish market, right? Now let's connect the line together. This market went up, right? And this market is actually coming down, right? And this market went up, right? And this market came down. This market now is heading towards north, right? So this is exactly what the market is about, right? So you can see now that it's a bullish market, right? This is an example of what the bullish market. So this is an example of what the bullish market is like. You can see that it's heading high, coming down, going high, coming down, going high, coming down. So this is an example of higher highs and higher lows as I showed you on the whiteboard session. Okay, so let's look for another example. So this is another example of it going up and coming down. This is another example of what a bullish market is. So let's get a bearish market. So this is another example of a bearish market. I think I will use my, so you can see the market going up, coming down, going up, coming down, going up, and now it's coming down. It's an example of what a bullish market is. And you can see the market. So in this market, you will want to be selling at the higher highs. That's the position you want to be selling, right? You want to be selling at these levels, at these levels. This is the level you want to be selling. This is the level you want to be selling. This is the level you want to be selling. Now, I said something about looking for reasons to sell. So I will highlight this level. I'll highlight this level. I don't want to be faster than myself, but I want to just explain what I mean by reasons to sell. So let's go to a lower time frame, and this is what I mean by time frame here. The market. Okay, let me hold on with this so I don't confuse you. But for subsequent video, I'm going to explain time frame. For every candle, this is a 4-hour chart. For every single candle that form is 4 hours. Every single candle, it's telling you what price did in the past 4 hours. So for instance, 6 o'clock till 10 o'clock, that's 4 hours duration. A candle is giving you the description of what price did, high lows, buyers, sellers coming to play forces of demand and supply to form a candle in 4 hours. So now let me just go to here. 2 seconds, sorry for this. Okay, so I said we are looking for reasons to sell. We're looking for reasons to sell. We're looking for reasons to sell. So the market has actually done something that I've seen that want to make me to sell. But I don't want to go faster than myself so that you don't just, Mike said, when you form higher low, just start selling. There should be a reason why you should sell. This is the reason why you should keep watching this video until we are done with this session so I can show you things that you need to know before you can actually make a buy trade or a sell trade. So last thing before we end this session is connecting the dots together. Connecting the dots together. So I said this is a trend, right? So we connect these highs together. Now the market can be very sharp. So I want you to just look at what I'm drawing here. So you can see that I'm connecting this line together. So it's coming to touch the trend, coming to touch the trend, coming to touch the trend. Let me look for a clearer example. The market really fell so sharply, so that's why it might not be clear for some of us. But this is another example of what I'm talking about. So we are connecting this to this to this, and the market is actually falling. So you discover that whenever the market gets close to this trend line, which is what we just drew now, the market is falling. Whenever it gets close to the trend line, it's falling. So to avoid any confusion, this is what I mean. Now let's assume this market hasn't fallen. This market here, let's be clear about this. Okay, this is what I mean. This hasn't formed yet, so the market is just like this. So you discover that the market came down, it fell, it came down, it fell, it's falling now. This is it here. The market came down, right? It's coming up now, it's falling. This is what we mean by trend law for a bullish market, for a bearish market, right? But I know that you haven't seen what is going to happen in the future, but you have connected these two dots together. Your expectation is that when price goes to touch this trend line again, you should be looking for opportunities to start selling. So we are now waiting. Price went to touch this trend line, or price came close or shy of this trend line, and we can see exactly what happened. The market started selling. So we can look for other subsequent example for a bullish market also to get a clearer picture of what we are saying, and we'll be done for this session. Okay, all right. So remember, we said we have a bullish market, we have bearish market, that is trending market. We also have ranging market. The market will range for a while, then you start buying. It range for a while, then you start selling, right? So if you connect these two dots together, for instance, I want to be very plain with every one of us, so understand how this market can play itself together, right? Okay, so let's look at example. So for instance, this market is just forming here, right? This market is just forming here. I said something that is not every point you see the market coming down, then it's about to buy, then you enter. You have to look for reasons why you should buy, right? So for instance, I connected this line together. I'm trying to be very honest as possible so you understand what I'm trying to bring out. So this is it. You assume, I think this would be a low, right? you assume this will be a low. For instance, just assume the market has not yet formed. This is your connection, right? Okay, so this is your connection. So you decided to buy at this position. For instance, this is where you decided to buy at this level. You decided to buy at this level. Where's my pen? You decided to buy at this level, right? So let's see what now happened. Did the market actually bought? Okay, let's see what happened if the market actually bought. So you bought at what level? So you can now see, let me remove all these lines. Try not to make the video long as possible. Okay, so you decided to buy at this level. You connected this low and this low together, right? And you decided to buy. If you had bought, you'll have been very, very profitable. You'll have made good profit. Yes, that's very correct. And also, the market actually gave us another low. Higher level of price. You can see that now price came below this trend line. Now I'm deleting this trend line now. So I'm now connecting to the latest trend line. So this is what I wanted to know. So you don't just adjust fix. You must be flexible. You don't expect the price to do what you want it to do. The market move, so you must be flexible to what the market is doing. At this time around, this is the latest trend line. I've been able to connect. I'm not just forming anything. I've been able to connect this together, right? It came here, it came shy of this place, close to this place, and it came here. So I've connected about 3 positions together to confirm that what I'm drawing is actually right. Yes, I'm being flexible with the price now, and I'm also confirming that yes, price touched this level. This is what I mean. Price touched this level, price touched this level, and price is touching this level. Now price is coming down to this level to touch again for the 4th time. So I'm looking if actually price will go up. But this time price broke the trend line, and what I'm looking for now is selling opportunities because price has broken my trend line. And we can see exactly what's happening. The price came and started selling, but we are not just selling now, except your strategy, which of course you've not built that strategy yet. But if you start selling here, of course you make good profits. But remember, the price is now going back up again. But let's just look. You can see that price actually went back up. So, but don't forget, you must see the rule of higher highs, higher lows, lower high, lower low before you start buying or before you start selling. And this will be the end of the video. Remember, we talk about trend line for a bullish market, trend line for a bearish market, connecting it, and also buying at the right price, and also looking for reasons to sell or reasons to buy before you actually place a buy trade. Thank you very much. If you have any question, please drop your question on the comment section. I will respond as quick as possible. And so that will be end for today. See you next week. Bye for now.